All right. Hey everyone, Mark here. Thanks for watching another Greenbridge Investing Market Analysis. Excuse me. So as you know, I'm going to be covering the major markets, Bitcoin, and select stocks that we're looking at. Sorry about it took me a little while to get back on here. Just had some technical things I had to work out. So with that being said, let's get started. Now, if you have questions, we're coming to the close of the market here. If you have questions, please ask. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now, let's begin with Bitcoin. Again, let me see. So, hey, Ankit. All right, so I'm going to go through Bitcoin. Again, if you have any stocks, I know Michael requested to see ROKU, so I'm going to get to ROKU. And, we're just going to go through what we go through. The whole point of this, if you're new here and you're just discovering Greenbridge Investing, the whole point is to get a clue as to what we can anticipate next week based on the price action and price structures that we have now. Okay, so let's begin with Bitcoin. For those of you that watched my video on Monday, Andrew's been talking about this as well. This. I'm going to draw a little symmetrical triangle here. Okay, this is what we were anticipating, and we were anticipating that when we only had like this information. Okay, so this is pretty much what the market's giving us. In fact, it's not exactly symmetrical. It looks more like a rising wedge type of situation, which actually, I'm sorry, a declining wedge, which is actually bullish. I mean, slightly, very slight, but it's definitely, consolidation is typically a trend continuation pattern. And we know that this trend has been bullish. What makes this difficult to trade, and the reason why we stayed away from, we mentioned the trade ideas when they triggered, like around these areas with these inside bars. We talked about them, but if you notice, we did not participate in them. And the reason is because the reward risk did not make sense. We're still fooling around this resistance zone between 95.64 and 10.168, which is just not attractive for us. Now, what makes this difficult is at some point, the market may just break out of this range, and we don't know when that point is going to be, and we don't know, if it's going to be the breakout or the fake out, right? But what we can do is measure our reward risk. And even at this level, if we get this inside bar, this is still a tough one to take. All right, 8,500 is still an important inflection point, and same with 76.95. Right? I'd prefer if we can test the lower part of the range and get a setup at that area, because the reward risk would just make so much more sense. All right, if we don't get that and we just get another higher low situation, I mean, we're going to have to mention it, but we'll also mention the reward risk situation. And again, at some point, this may just break out. Maybe some news catalyst comes along. The chart's not going to tell us when that breakout will occur. But if it pushes like this 10,000 level, closes strongly above, and the next candle is not red after that, then most likely you're going to see follow through. Okay, because a lot of shorts, a lot of bears are piling into this as they usually do. I don't know why. I don't know what makes them think this thing is going lower, especially in the current environment that we're in. But they do, and when they get forced out, right, that's what creates all that extra buying power, buying pressure that can push this thing through the 10K area, okay? So that's what we're looking at. We just have to be patient. Patience plays a very big role in this. Hey, guys. All right. So again, if you have any questions, please ask away. Now, let's get into the stock market here. So I want to talk about the NASDAQ. We've had a situation here, right? And it's been tricky. So as you know, we've exited our longs because it's a tough spot, right? We had this bearish pin bar, and we got out during this minor bearish pullback here. But the thing is, you don't know if this is going to be minor, okay? You don't know. So we know one thing is that in this area, in the lower 9,000s, we know that the market is vulnerable. Okay. Now, I remember having this conversation with Michael. We talked about the failed high situation here, which was a potential failed high. And look, we took that out, but we're not much higher than this high. Can this keep going like this? At some point, it's going to turn. Okay. Now, I do highlight the higher lows because those are important inflection points. And right now, 88.62, or basically 88.5, is the point that we need to keep an eye on, because if we close below that, then we're probably going to test this 8,300 area, this 83 and a quarter, 83.50. The 83, that 83 and a quarter is still the key support for this bullish structure that we've had since the 6,600 low. So even if the market gives us that broad pullback to that area, that's going to be a buying opportunity for the stocks, right? So that's why that's so important to us. If we keep getting these small higher lows along the way, like Andrew mentioned, we're still going to look for stocks. We're going to look to take our small bites and rotate in and out of them, because that's the more conservative thing to do in such an environment. We're still trying to take advantage of the bullish momentum, which, I mean, look at this bullish pin bar. It's trying. Okay, when a market sells off, it doesn't try like this for long. Okay, usually you get big bearish candles and you get follow through. You don't get indecision. Like back here, we had indecision, right? You usually don't get this. So there's still some strength in this market, all right? So like I said, we're trying to take advantage of that with some stocks, but you don't want to get caught when this thing gives the broad pullback. You don't want to get caught with a bunch of stocks and then just take all your stops. It's just not a pleasant thing. It's better off to be patient, wait it out until that opportunity comes, because it will come. All right. And it's really, the factor is patience, and patience is the hardest thing to have, especially since we don't know, there's a lot of uncertainty, and that's the balance, right? That's what makes it so difficult. Is this the time it's going to go higher? Is this the time it's going to break out? Or am I buying the top, right? That buying the top is a possibility here. When you're buying a pullback, that's not a possibility, right? You're not buying a top when you buy the pullback. That's why we prefer to buy the pullback. I don't care if the NASDAQ runs to 10,000. If it doesn't give us a clear-cut signal or whatever to do something, I don't mind missing moves and all that stuff, because you don't lose money missing moves, right? And a lot of new people, they don't realize that yet. Okay, so that's the NASDAQ. We're going to get into some stocks here in a moment. Again, if you have any questions, please feel free to ask. Now, let's get into the DAX. Now, we sent out a trade idea during the week about the DAX. I believe Andrew sent one out. And this thing, I believe it was a short. Now, I don't think it actually activated, because he was talking about the CFD here. You have this double top, okay, around this 11,200 area. Now, as we know, this thing follows the stock market. So if the U.S. stock market, the NASDAQ and the S&P, if they stay strong, this is probably going to not really go anywhere on the bear side. You need the pullback to happen on the S&P and on the NASDAQ. Now, so right now you're looking at a range very similar to the euro. Okay, and we're going to take a look at that euro. But the range high is around this 11,200 area, and the range low is around this 10,250 area. So you have like this 1,000-point range. So what do you do in this situation? Well, for one, you shouldn't be buying up at the higher part of the range. If anything, you should be selling, locking in profits, reducing risk, getting out of maybe you have European stocks or something, right? This would be a situation where you want to at least reduce risk or lock in partial profits, something. Yet you should do something at a range high, okay? It may not break out and continue higher, especially if the NASDAQ starts to turn here. The range low, that 10,200 area, that's the place to be looking to buy, right? Just like the euro. You want to be buying around that 108 area. We're going to talk about that. But that's the area where you look to buy, unless you have a decisive close below. This is all dependent on how the market closes around these levels. I can talk about levels all day long. And if the market just goes to the level and just goes right through it like it's not even there, you don't want to get involved in that. And that's another thing that a lot of newer traders don't understand. You can't just place an order here and just say, well, that's the level, right? I should be okay. Well, no, because that one time the market may break and now you're caught. So that's the thing to keep in mind. So you want to be prepared for a reversal at that 10,200 area. And same for like the European denominated assets and that type of stuff, right? That may be a buying opportunity. Just like the stock market, we're waiting for the stock market to give us a broader buying opportunity where we can put on some longer term positions, right? That's usually when you get those broad pullbacks. Okay, so that's the DAX. Again, everyone, thank you for joining me. It's nice to see everyone. If you have any questions, please, I'm here to answer them. All right, now let's go take a look at, I had oil next on my list here, and oil, You know, oil had that move. I know, like Andrew mentioned, it reached all three of our targets. I'm going to pull up that chart, that you know, the unpopular chart here, the Owanda chart. I mean, it's just been, you know, pushing, 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 and it's going back up into this old resistance area around this 29, 28 area. This is a bullish, I mean, this type of pin bar showing up here is not necessarily a bullish sign, you know, as far as a buy signal because of its location, but we can't ignore the long tail on the bottom. I just can't ignore that. I mean, obviously it tried to sell off and buyers came in. So I would anticipate that this thing is at least going to try for that 29 area. Now, if we go take a look at the other version of this, right, where it gives us the correct numbers, I believe it's USD WTI, right? I mean, the same type of chart, same type of price action, even that pin bar, right? All the same. The only difference are the prices. So this thing actually pushed the resistance at 29 a little bit, right? And now we're fooling around in these mid 30s. You have this gap that dates back to like March. Don't ignore that, okay? That can act as a resistance. So again, oil, this is not in a position that it's not in a location that we want to be buying, okay? We missed the breakout here. We're not going to catch them all. We'd rather, again, you miss something, no problem. You don't lose money missing moves. So we would rather wait for the next move. And this, although this is a nice candle, we're going right into this resistance area and the reward risk just doesn't make sense. So we want to see a pullback. Oil has not pulled back. And most likely, you know when you'll see that pullback? When the stock market pulls back. I'm guessing that you're going to see them pull back together. Okay, so I mean, if you notice, this rally in oil seems to coincide with the continued strength in the S&P and NASDAQ. All right, so if I don't have any questions on oil, let's move on now to, if I have some time or if people have questions, I'll cover gold as well. But I wanted to talk about the euro here real quick. The euro, let's pull up that euro chart. Now we were very interested in a long, right? But we missed it again. This was a tough one. But just like that DAX chart, right? That range low at the DAX was like 10,200. Look at the euro. The range low is around 10,7, what is that? 10,760, that area there. So the high, the mid to high 10,7s, maybe low 10,8s. This is why, you know, and again, this is a great lesson as far as smaller time frames. People that may be watching a 30-minute chart or a 15-minute chart, they may get buy signals during this situation here, okay, as it's going toward the, you know, mid to high 109s. And then it gets stopped out and they wonder why, you know, this thing looked so strong. This market sucks. Well, you're at a range resistance on the bigger picture, right? The 10,109.5 area is a range resistance. You really shouldn't be buying in that area. Okay, if anything, you should be selling. Sure, no problem. I'll cover the Aussie dollar. I'll do that next since I'm on the Forex here. So because of this range high situation, you know, and we're only interested in swing trades. So this was very clear. Do not buy here, okay? So now we get this pullback. Okay, great. We're not going to short this. We're going to look to play the range low again, and maybe, hopefully it'll hold the range low and give us a signal. If not, if it breaks, then that's a new piece of information. And typically if it breaks something, like if it breaks the range, the euro can have a dramatic move when you see that type of stuff, okay? Because it's been in a range since what, March or maybe early April? That means there's a lot of volume. There's a lot of participants caught on one side or the other. So whichever way it breaks, you're probably going to see some follow through. Now, I'm not going to sit here and speculate on all the economic and you know, economic information and all the nonsense. I don't need to know that stuff. All I need to know is which way do we break, okay? If we break this lower support and we get some sort of follow through pattern, like some sort of inside bar or something, or a little mini pullback to the range low area, I'll look for shorts, okay, for a swing trade. It's that simple. I don't care what's going on in their economy. Same with the range high. We break the range high and we close. See here, we closed above, but not really. And then we got a red candle. That told me right there, we're not breaking out, right? So no reason to try to buy that breakout when there's no reason. There's just clearly no reason. All right, so now we're back in the middle of the range, so we wait. Why am I talking about so much detail in the euro? Because you can learn a lot from these situations because they occur in other markets as well. All right, so hold on. I got Carlos. Okay, and Bella, hold on. Let me see your questions here. ACB, sure, I'll check that. Okay, Carlos, on oil. All right, so let me all right, so let me do this. Let me go through the Aussie dollar real quick. I'll do these in order. I'll go through the Aussie dollar, we'll take a look at ACB, and then I'll go back to oil. But good questions, good questions. I appreciate you asking. All right, so let's first go to the Aussie dollar. We were also interested in that Aussie dollar, all right, because it was looking like a nice long. Here's one thing to keep in mind about the Aussie dollar. It also coincides with the NASDAQ and the S&P. If you notice, this almost looks exactly like the NASDAQ, okay? It's a little more noisy, but it looks very similar. Now, what you have in the Aussie dollar situation right here at the 65.73 area is a range high. It's a failed high, okay? It tried to break out, and this is most likely when something is going to fail, this is what it does. It tries to break out, closes above, okay, good. And then it follows by a red candle, okay, like some sort of bearish, especially like an inside bar or a pin bar. That's not good. That breakouts don't do that, okay? The next candle should have been green, and it should have been higher, and it should have closed strong. So this is a problem, okay? Now, I mean, what do? If you're in this thing, you know, you have the stop, you wait for the stop because maybe you get a small pullback, just like, you know, the NASDAQ is trying to turn, and maybe you see some follow through. But the thing is, we're going into Sunday now, and anything can happen between now and Sunday. So you have to, it's a gamble, right? You have to take that chance if you want. If you don't want to take that chance, and this thing, you know, opens on Sunday week, well, you know, that's what your stop is in place for, right? So that's the thing there, but you do have a failed high here. If this current candle can hold, all right, and the next candle takes out this high, because remember, we're looking at daily candles here, 65.72, if you could take that out, then you should be in good shape. I would also be expecting the NASDAQ to be doing something similar. The next resistance on this thing is around the 6,700 area, okay, or high 6,600s. So there's still some potential in there, okay, at least for that resistance. Now, if there's a broad pullback, okay, and we clear the 64.08, we clear that support, then you're looking at that like that 61 area. It needs to hold that area in order to maintain this trend. Okay, does that make sense? So that's the Aussie dollar. I mean, in general, do I think it's a long or a short? I mean, I'd still be looking for longs. The structure is bullish, just it needs to give me another setup or something, all right, at this point. So that's the Aussie. Okay, let's take a look at ACB. Yeah, ACB, what a pain. Okay, let's take a look at ACB. Now, this one's been all over the place. This, you know, I've been thinking about this stock because, you know, we had the right idea. Okay, it faked us out. Now you say you're still in it, Bella. This is one thing, a stock like this, here's the problem with it. It's going to attract a lot of day traders because this is an ideal day trader stock. It's cheap enough and it's moving in big waves. All right, when it moves like that, day traders are going to be all over this, which means you're going to get a lot of noise and you're going to get a lot of, you know, when you have like a vertical move like this, I'm not surprised to see this type of price action because there are day traders probably all over this thing. Now, the good news is this mess here looks like a consolidation. Okay, that's what it looks like. So the reference point I think to use right now would be there on this $12 level. See this low right here? If it can stay above that and consolidate above that, then you're looking at a continuation pattern, okay, to go higher, which means it needs to push like that 19.5. You push that, I mean, then you're looking at like the mid-20s. So if you still have a small position left and you locked in some profit, you know, I mean, there's really nothing that bearish about this. Now, anything can happen, of course, because it's a day trader stock and you may see a more dramatic pullback, but like if I was managing that position and I had a small position left, you know, and you had reduced risk and you locked in some profit, let the winner run. If it's a winner, let it run. If it breaks out, you're gonna, you know, you're just gonna collect more. Okay, I don't know where you're in from, but you know, maybe you give that $12 level a chance to hold. If it closes below the $12 level, perhaps then you get out. But that's the chance you take. Okay, I generally like what I like about this stock, and I'm not too crazy about these stocks anymore because of this nonsense. But what I like about this stock is this initial move, off that $4 level, whatever that low is, to the 1750. That initial move, that push, that vertical move is typical of a trend change. Okay, so when you get something like that, that means there's something new driving this thing. And I also noticed CGC has improved, and even Cron has even gotten better. So maybe it's time for these things to now come back. So again, let your winner run. That's what I say. Or maybe raise your stop 9.5. Wow. Okay. So even if you get out at like 12 or below 12, you're still locking in some profit, right? So in that case, yeah, if you've reduced risk, that would be my my position on that, is let it run, and watch for that $20 breakout. Give it a chance. Okay, I don't see a clear double top. I don't see a clear lower high. All I see is consolidation. All right, so good question. All right, let's see now, Carlos. We want to talk about the USD WTI. Okay, let's get into that real quick. I mentioned it before. Now you asked about the targets, right? The target points, because I know it reached a number of our targets. My first target, second target, 32. Should I take another profit? Also, can you take a look at CNST? Okay, sure. Yeah, okay, sure. No, we'll take a look at those charts. I'll take a look at the chart, pal. Okay, so let me do this one here real quick. So here's the thing. If you locked in some profit, great. With this candle, like I was talking about, this may turn more bearish. What you're facing right now, again, is Sunday into Monday, and anything can change. Anything can happen. So you have to decide if you want to take that risk. If you locked in some profit and you've reduced risk and you're confident, there's nothing bearish about really what's going on right now. But again, a pullback can come out of nowhere if there's some news or something that a chart will not account for. So you have to decide. Like again, let's just say you had 3 units, right? And you locked in 1 unit and you have 2 units left. It depends. If you're feeling aggressive, you let it ride. Okay, you are facing this gap in these higher 30s, so there may be some resistance there. The key thing really is giving the chance from Sunday till Monday. Now, with the stock market trying to still be strong and all that stuff, and this trend is not bearish, I would say just like the the ACB thing, it's like, hey, give it a chance. Let your winner run. That candle is not exactly a sell candle. You can maybe you want to put a manual trailing stop at like maybe $30 or something like that. And if it closes around there or through 30, then maybe start, you close out more. You have to come up with some sort of plan for yourself. I can't give you all those answers. Okay. But I can help you out and tell you what the risks are. So again, you may push higher, which again, this structure is strong. So I would think you have a better chance of that. And you just have to deal with these support levels, 23 or 24. And then you have like this $30 area, right? So as long as you're staying above those supports, you have to say it's strong. All right. So maybe I hope that can serve as a guide. Going into a Sunday, like I said, you have 5. I don't know what time that thing closes. It may be closed, but you can also reduce your risk a little more and then try to give your 1/3 position and just be aggressive with that. You have to decide, I guess, what's best for you. All right. I hope that answers your question. Okay, but yeah, so I wouldn't close it all at the current levels. No, I would give it a chance. Okay, CNST. Okay, let me take a look at that real quick. CNST. Was that a clear answer for you, Carlos? All right, I put the wrong symbol in here. CNST. All right, let's take a look at this real quick. If I didn't give a clear answer, please ask me again, because there's no point in me giving you an answer if it's not clear. All right, so look at this thing. All right, I see right off. I'm not familiar with this stock exactly. Where I see a range high at 50. okay? And I see a range low at around 20. I see some support around 30, okay? Right now, you're in the middle. You're in the middle of this, and I don't like the middle. The middle is not a good place for anything. Now, you can say, well, isn't this a pullback to buy? It could be, but here's what you're facing. This move from $50 to 36, that's a lot of momentum, okay? So that may follow through. So what I would like to see, if I were to buy something like this is still too early to buy, even though you can argue, well, there's a bullish candle there, sure. But what this needs, though, is it needs to prove itself with a little more structure. And what I would like to see on something like that is, you know, a failed low, meaning it pops up, pulls back, gives you a double bottom or failed low. And you can argue and say, well, look, at 19 and a half or whatever this is, it just went vertical from there. And the pullback never occurred until it pulled back to 28. So you had to miss like a really nice move to take a lower risk, or basically a more structured risk. But that's what you're dealing with. So if you can get a small structure here, maybe a push up a little bit followed by, you know, like a mini double bottom situation, like kind of like one of these situations right here. See how it popped up, pulled back, gave you a little higher low. If you can get one of those, that would probably be a more conservative place. Like I said, if buying into this thing now is aggressive because you're lacking that structure, and this bearish momentum, this broad bearish momentum may continue. You may get a little pop up and it may push lower, right? So that's why there's not enough information here. Are you buying a high? No, you're buying a low, but like I said, you're fighting the momentum. So those are your choices, right? And for me, since I'm more conservative, I'd prefer to wait for the double bottom or failed low situation because I know that's a higher probability. And if I'm wrong and this thing turns here and this thing runs to like 45 without me, well, I don't care because I don't lose anything, right? And that's how you have to look at these things. I'll just move on to another opportunity, okay? Because there's plenty of other opportunities, but great stock. Thanks for asking. Okay, so let me see what else I have on the list here. Okay, POW, Ruby. Well, okay, so I know Ruby's still on our radar. Here, let me put this up. Let me pull this up here, see what this thing looks like. I know we haven't sent anything out yet because it probably hasn't done anything. The Russell 2000 index. Oh, no, I'm sorry. This is the wrong one. Hold on. There, that's it. Okay, so again, with this one, this is one of those cheaper stocks that we've been trying to work with, and we've been talking about this like on the podcast and stuff. You know, Andrew's been on top of this one. But right now, so you have this consolidation, and you have this lower high at 573. That's not exactly good, okay? So in this situation, you get this little bearish candle at the moment. I would hold off on this. See if it can test the 4.5 area and give you a reversal there. Because right now, at this point, it looks like it can do that. Right, all it needs to do is take out this low of $5, and you're looking at like maybe that 4.5 area, okay? And then the main bottom here is $4, the whole number 4 around there. That's what you're looking at. And I see a head and shoulders pattern too. So this could be the right shoulder, you know, again. So I would wait until that. I'd be more conservative with this one, especially since this is one of those more speculative ones, okay? That's what I'd say about that. And again, if you get the reversal here, maybe this is just, you know, nonsense. Maybe this is just noise, this current candle. You need to at least take out this 576. You need to take it out and close above it for this thing to prove that this entire structure here from this 450 low, that this entire structure is a higher low. It needs to prove that, and it hasn't done that yet. Does that make sense? So I would hold off on this one, you know, just based on this chart until it can show us a better structure. Okay, so let me see what else I have here. That's Ruby. I hope I answered your question there. And BPMC. Let's take a look at that. BPMC. Okay, BPMC. Blueprint. Okay. So you're saying that was similar to that other one, CNST. Well, let's see. So again, these are going to be, obviously these are all in play right now because of, you know, the current situation, the current environment. Now, so, all right, You have a higher low at 61. You have a gap over here. What is this? It tried to close that gap. You still have a gap that it can try to close. This gap between 66.5 and 70, that can act as a resistance. But you do have a higher low here, and you also have a higher low at 55. So this is a stronger chart, okay? Because you do have those recent higher lows, and those are meaningful. What you're facing again is that gap resistance. So you're measuring your risk from basically 61. You know, is there a trigger in here? There's no specific setup in here to buy, but you know, perhaps the breakout above 66.32 can give you a buy signal. I'm not a big breakout trader. I'm not really fond of breakouts like that, but you do have the structure in your favor, okay? And I would expect that a breakout, if it closes strong and you don't get that, like that red candle right after it, then it's probably going to try to close that gap. So it does have potential. All right, definitely a nice looking chart, BPMC, compared to that CNST. I agree. So thanks for pointing that out. All right, I don't think we have any specifics on this one as far as trade setups, like I said with Andrew, but we could definitely put this on the radar. Okay, great question. So now, Pao, did you have another question? I thought you had did you have a question in the chat room or something? I remember you asked me something. I don't remember what it was, but I remember it was you. Or maybe you asked me like on the YouTube comments or something, or you sent me a message. That was it. Right. Okay. So do you have the answer to that question, or would you like me to review that real quick? I mean, I have a couple of minutes. The market's closed now anyway, so I appreciate everyone sticking around. This is kind of long, but you know, hey, if you like to hear it, I'm glad to provide some perspective here. Did you get your answer? Because yeah, I've had to deal with some stuff here. Okay, cool. All right, great. All right, so if that's it, if I don't have any more questions, I want to thank you all for participating. Okay, good. I want to thank you all for participating, spending some time with me here on the Friday afternoon during the market close. I hope you found this informative and helpful. You know, again, if there's any other questions that you have, you can always ask in the chat room and we'll follow up there as well. For those of you that are new, we don't share trade signals in these videos. Those are sent out by text and by email to our members, okay? And I have no problem reviewing, you know, where the trade is at this point, but we're not actually going to send a signal, you know, buy now, you know, put the stop here and targets. I'm not going to do that in these videos, just to be clear. Okay. Oh, that's right. Michael asked for that, like in the chat room. Let me do that real quick. And I said I was going to do it. Let me do ROKU. It's one of my favorite stocks. Sorry, Michael. Thanks for reminding me. Yeah, thanks a lot. I was just wrapping this up, and you know what, Carlos? Good thing my mind is all over the place. Sorry about that. Okay, let's take a look at ROKU. Michael brought this up. I'm going to do this real quick, and then I'll wrap this up. Okay. So ROKU. ROKU. This is a lower high, right, at this 120 area, and now it's kind of looking ugly. ROKU is a tough stock because when it moves, but when it moves the wrong way, it moves the wrong way in a big way, right? So as far as ROKU goes, no reason to buy this thing right now, not with this looking candle, but we are going back to this 105 support, which is a key trend support, okay? I like the location for ROKU, so thanks for bringing this up, Michael. Like the location for a long. I don't like the structure, and there's no setup. So I'm definitely going to be watching this carefully because this is a great location for a reversal. If I see the reversal, if I see a pin bar or something like that, it'll be aggressive because now we're facing this lower high. It will be aggressive. But if the market continues to push higher, you know, ROKU is likely to at least benefit from some of that strength. If I see the reversal, I'm willing to give that one a try. Okay, although it's, you know, I'm sure you know it's a wild stock. So that's ROKU real quick. Definitely in a great location, just no setup. All right. Oh man, because I turned the chart off. Hold on. Sorry. All right, there we go. I just talked about ROKU and you were looking at the Green Bridge logo the whole time. Okay, real quick. So again, so you have the lower high at 120. You have the trend support at 105.71. And this red candle right here is not, you know, there's no buy signal there. So even though we like the location, definitely like the location for a long on ROKU, there's no reason to go long. Okay. Yeah. Okay. Got it. So what I want to see on Roku then is a bullish reversal. All right. I want to see a pin bar around this 105 area. I want to see maybe an inside bar. I want to see a failed low, a double bottom. I want to see something like that around this location. Then I'll be very interested in a swing trade long setup. Again, it's aggressive because we're facing a lower high off of 120, but this entire structure from this 105 to this 140 high, this entire structure can be labeled a consolidation, especially like in terms of Elliott wave, because we have, that's a wave 4 up there, right? We have wave 1 over here, right? Peak of wave 1, bottom of wave 2, top of wave 3 here, and this three-legged formation is wave 4, right? Which means we have a potential for a wave 5, at least to attempt to go to 140. I mean, right off the bat, I can see that without putting the wave counts on the chart. I could see a clear Elliott wave structure, which is a bullish thing. Okay. All right. So that's Roku again. Sorry about that, Michael. I should have covered that first. You mentioned it in the chat room, but there it is. All right. So that's pretty much it. If I don't have any more questions, again, I'm going to wrap this up now a second time. I'm going to put the Greenbridge logo back on. So, all right, everyone, thank you all for joining me. And if you have any questions, again, you can follow up in the chat room. I'll be happy to answer them in there. Over the next couple of days, I'll be doing my analysis as usual. Usually we try to check the room some point on Saturday and Sunday, especially if there's some kind of movement going on in Bitcoin, which is pretty much the only relevant market, moving at those times. Okay, so we'll see how things go on the Sunday open into Monday. Other than that, have a great holiday. We have a holiday on Sunday, which is probably going to, the market may actually even be closed on Monday. I don't even know because I haven't checked. But just keep in mind, holiday volume may be light going into, even for Forex, volume may be light, activity may be light going, into the holiday, and Tuesday probably will be more when it comes back. Of course, we'll be looking at stuff if the market is open on Monday. All right, everyone. So have a great day. Thank you again for watching. Thank you for all your questions, and I'll speak to you then. Okay, take care. Bye.